What in the world is going on with the markets? Not just the stock market, bond market, crypto market, you name it. Are we looking at risk on? Are we looking at risk off? And I think that I have the answer in this video. So I'm going to share with you my take on what we're seeing in the markets based on where pretty much everything's positioning itself, how it's moving, and what we can look forward to in the market as it continues. So I will give an update on the best penny stocks by now. We're going to talk about NVTS and its drop in the after hours, with its earnings being announced down about 15% as I record this video. We'll talk about why that is and talk about whether or not there's still opportunity remaining based on their technology and what they're aiming at and everything. But overall, I want to give that big old market take, not like I said, not only on the stock market, but also crypto market, bond market, gold prices, you name it. We'll wrap up a little bit of everything in this video. So let's start things off with SPY. So the stock market's been on absolute tear, no surprise. And I talked about the importance of these peaks that we saw here going all the way back to this price. And I called that top and said we should have trouble here. We did, at least initially. It is encouraging that we see those bottom wicks. But the market, we can say it's not been like, yeah, we had that strong pop, but then now what? Now a little bit of like, do we stay up here at the top? That question is yet to be answered. When we go to the Qs, we see a lot the same thing, but some reasons to still stay generally bullish on this, by the way. So I just want to still put that out there. We're still seeing the technical signs that up is still the general direction. The momentum's saying so. The moving averages are saying so. The earnings are currently saying so. So we're not quite seeing that softening yet. But if we look into a little bit more sensitive areas of the market, because right now I think with the Qs especially with its outperforming, I think we're in a situation where the producers who are producing, so the big tech companies that continue to astonish time after time after time, those right now I think are still seeing their prices increase, and any companies that aren't still putting in that sort of production that was expected, I think they're very sensitive at this moment to decline that we see. So let's go over to IWM, which was the biggest underperformer of the three, not as much as the Dow Jones. When we look at that one, that was down about 0.5% today. Don't often talk about DIA that tracks the Dow Jones Industrial Average, but that one's certainly the worst performer out of them so far, which could actually lead the other ones. IWM is usually what I use to inspect the risk assets as we're looking at what is going on with the small cap companies. And that goes along with the penny stocks. And we'll also wrap crypto into this as well. But just take a look and see what we got. Now, mind you, if I put the technicals back up here, yeah, we see those trend lines that I talked about this morning. We did poke down below that a little bit. Where do we find support? Well, let me show you these two rays, and we're also going to reset the view and zoom out. We did tag the bottom of a bullish channel. As we can see from here, all the different touches we have across the bottom, across the top. And so far, like I said about the Qs and SPY, still a lot of reason to say generally bullish for where we're at. But I did talk about some near-term concerns for IWM that I wanted to see us back up above the 5 and the 13. This long, low bottom wick here is a very good thing. The momentum is declining as the prices are increasing, so that's bearish divergence. We need to make it back up on top of the moving averages. I said that before. So where we're not seeing the companies that are as big of producers that don't really put out the results time after time, especially like the big tech companies, we're seeing a lot more softening off those peaks so far. And then when we go out to a place like Bitcoin, I talked in this morning's video about the bearish divergence we see. There's that bull channel, which we're at the bottom of. Maybe this is that great buying opportunity. And my friend Crypto Will, Fresh Prince of Crypto, search his name on YouTube there. Find him, subscribe to him. He's awesome. It definitely has a pulse on the crypto markets, a very in-depth knowledge of it. Whereas I talk about the technicals, he really gets into it. So we see this really nice cup and handle. We saw the price pump from that, and then more recently, this inverse head and shoulders. Will we get to that 150,000 per year's end? We might, especially if the bottom of this channel holds. So just to put that out there, it's still possible that we make it up there by year's end. So year's end puts us all the way out. Let me see, where's December? There we go. Year's end is right here, and that coincides pretty much perfectly with 150,000 right at the top of this channel. So maybe now's that major buying opportunity. What are we looking for if this thing falls out of the channel? If we get rejected here, fall through the support, turn it into resistance, that's when we have to look out below. So right now we don't have that. So a long bet right now could be understandable given the weekly chart that we have. Short bet is a little bit hesitant, a little bit early, and as a matter of fact, Crypto Will has maybe he shaved, I don't know. He has reserved that comment so far, saying that, I don't know, now short, I don't want to speak for him, but he definitely doesn't seem ready or in the mood in order to short from what he's currently seeing. So you can go to him, you can get his exact take. Like I said, I don't want to put words in anyone else's mouth, but I will say that we're at that critical moment for Bitcoin, whether we're looking here now or we look at the moving averages. If I put the EMAs on here, we're down below the 200 EMA. We're also down below the 200 SMA. We have the bearish crossover of the 5, the 13, and the 50 that happened back here. Earlier in October, we got that crossover of the moving averages down below the 50, and now we're losing the 200. So when we look at the daily chart, it's saying, maybe now's that time that we see a further decline in prices. It absolutely could happen. So from a technical standpoint, and once again, feeding back into this whole idea that I'm trying to talk about what we're seeing across all markets, is we're starting to see a hesitance, if you will. So we don't have Bitcoin falling through the floor that the sky is falling. Same thing for IWM. We don't see it falling through the floor or anything like that. So right now the supports haven't totally given way to a negative sentiment. We certainly don't see it with the S&P 500. We don't see it with the NASDAQ 100. But we do see a little bit of caution that we haven't seen before. And it's reflecting especially the more sensitive areas, like we saw with the small caps and like we're seeing with crypto. And it doesn't end with Bitcoin, by the way. If we look at the altcoins that are even more sensitive, such as when we look at Sol, when we look at Solana, SOL is kind of SOL at the moment, although it could be sitting down in this support area, which is a very critical support area. And it's kind of in the middle of all this chop over here. Yeah, we're sitting right at that support. So long time, well, we just broke consolidation and we could give up a little bit more on this, maybe down to the 140s. We're going to have to watch and see. But we are down below the 200. We're down below the 50. Let's take down all the technicals so you guys can see that a little bit more substantially. There's the 50 in red, the 200 is here in blue, and we just lost that. And that 13 is crossing down over the 200 as well. And then when we look at SUI, for example, we might have a bit of a double bottom. We're going to watch and see. And we can find some critical support, though, right at that $2 mark. That's that round number support is what we're seeing, that round number bias. Is certainly keeping us afloat for the moment, but it could give up more. SUI is definitely one of the smaller market cap cryptos, but still pretty darn big. So market cap 7.62 billion versus Solana's 91 billion. If we go to Avalanche, this one $7.13 billion market cap, looking a lot like what we had for SUI. So this isn't particular to any one asset or security that might be out there, any one crypto. We're seeing a lot of that sensitivity show up and a lot of that de-risking from people probably cashing in and probably some liquidations happening along the way. And it just keeps on repeating, like I said, in the riskier spaces. All right, so, well, let's look and see what it looks like for gold prices, for example. And we'll take that down. And gold, I called the top on this one. We're looking at the weekly chart, gold to the US dollar. What are we seeing there? Well, there's the tweezers at the top, which could come with a sell. Got a low bottom wick for support on this weekly chart at the 5-week moving average. And now we're getting this narrow candle, but it is only Monday, so we're going to have to watch and see. We could stay indecisive. We could retest the 13. We'll watch. But the point here is that we're off the highs for gold as well. So maybe a little bit of exuberance followed by a little bit of profit taking, de-risking along the way. And so I would call this natural settling, especially when we were at such a wickedly high overbought status for gold as per the RSI when we look at it. So we see the markets off their highs. We see the crypto market definitely off its high. We see the risk assets off their, like the riskiest ones, the small caps that are off their high. Penny stocks definitely off their high. And if we go to something like TLT, which we'll be talking about, the 20-year treasury bond, that's what this ETF tracks. It's definitely off the highs, but it's also not down at the lows. We were down at like 82. I called that critical support, and we found ourselves up around at 92. So that's a significant jump for something like the 20-year treasury. And so that's nice. Let me actually drop to the, all right, we'll go to a monthly chart here. We'll see how that treats us. Well, we're certainly not up here at that 94 to 97 range. I'm rounding here 94 to 96, 65 is what I have, where we got that massive rejection back in September of last year. We're kind of in the middle again. So we have the markets off their highs. We have the risk assets, like gold is off its high. We have the bonds off of their lows. And so we kind of see the market kind of putting itself in this position where it's like, okay, I want to be ready for the scales tipping in some direction. So either we go massively bullish from here, or we take that quick herky-jerky moment back down to the downside. Now, mind you, we could also chop sideways, which gets really boring and irritating and tedious. And I'll tell you what, if you guys are people who buy long options, so long calls, long puts, that you buy to open your positions, that can eat away because the time value, you don't get the movement that you're looking for. And that's usually where short strategies come in, where you're trying to contain the price in a range-bound way. Chopping sideways is very good for that. And there's definitely strategies that you can do that are income generating to take advantage. And I do run options workshops, by the way. I'll let you know when that next one is ready to go. I'm going to have another level 1, another level 2, and I'll reach out to Stockman. We'll get it all fired up, and you'll find that link down in the description. I'll let you know those dates as they come along. But again, if I were to summarize the different things that I'm seeing across the bond market, we could even look at the 10-year if we wanted to. We're going to see the yields off its peak, but we're also going to see the yields off their lows. So everything's sort of settling just a little bit, that we're starting to see a little bit of uncertainty. So yeah, the markets have been very toppy, and this earnings season is definitely doing a lot to reshuffle and rebalance things, if you will. And I think that that's a good transition into what we're seeing with NVTS in the after hours. Look at this red pepper that we see, just a big old de-risking leading into the earnings, and you can see why people are de-risking. And if we put up some of the lines on here for the technicals, like the Fibonacci extensions and retracements on this thing, there we go. We see a little bit, and it's not the best view that we have right here, but there's a lot of support that happens as we get down into this $10 range. So certainly down as we get down to that low 10, that 2-digit, 981 is absolutely enormous support, by the way, if we get down that low. And it is nice to see it rebounding a little bit. Now, I will say that we will likely hit our heads if we do make it back up to 1186 or 1198. We could see that happening. So in terms of this happening, I have not listened to their earnings calls. I just saw a little bit of the headlines, and I definitely plan on looking into this, because if this thing is going to settle a lot more from where it's at, it's a technology with their gallium nitride, I think is what it is. Their technology that happens to directly impact the AI space. It could be one of those infrastructure plays that could end up being a diamond in the rough. And so for me to be able to jump into something like that, I wasn't able to catch it at $3 or $4. This thing just shot up so fast. I missed it. I didn't want to chase it. So as these prices settle, is it coming back to being something that I would actually like to invest in? I've taken some trading positions. I've made money on those trading positions, but what I haven't done is I haven't taken an investment position where I buy and I hold for long-term for NVTS. That takes some fundamental analysis. But this is what I'm talking about for those moments, those sensitivities, if you will, that I think the earnings is going a long way to decide where we find that rebalancing to happen. So I think that these earnings happen to be pretty darn important for us. I think government shutdown is also something that the longer that persists, the more we're going to see this shakiness, if you will, in the markets and the kind of jutting around. And we definitely want to see that decisive move. So what am I doing about it in the meantime? Well, by the way, the penny stocks themselves, it doesn't just stop with NVTS. If I go down through, you can see, if you look at the red all the way on the right side of the screen that's over here, there's very little green. CTM is one that I have on my list that actually managed to squeak out 12% today. And as a matter of fact, it might pop up a little bit more. It looks like we had a big old volume pop going back to Friday. Nice little volume popped open. This one couldn't break up, so keep that on your list, if you will. There's a bonus one for you. But a lot of other things that are on here. So KRRO down 10%, Wolf down about 10%, NVTS down 9%, BBAI about 9%. Lucid dropping down, man, they're all the way down at 1664, so also giving back more cash on this one. Now, mind you, I think Lucid can be that dark horse, so we'll be watching for that over time. I don't know that now's the time yet. They probably still have the same issues that they've had for a long time, and I don't think they've been resolved, but with a promising product that has scaling issues, if you will. And that scaling issue could be the thing that limits them for a while. So we'll have to watch for that one. Beam also giving up a lot. So this is what we see with the risk assets, the riskiest ones that are out there, I should say. So the small caps underperforming, Bitcoin also underperforming, what we saw with the SPY and with the Qs, for example. Gold settling a little bit. like I said, I think we're at a big indecisive moment, and we want to do our homework during these times to see, okay, well, can we take advantage of the short positions and ride it down? That's a possibility. Can we also take advantage of the moment? What does that bottom look like? How do we know exactly when it's there if we are going to sell off? And that's something that we absolutely want to be aware of and want to watch. And I'll tell you, if the S&P and the Qs, NASDAQ 100, I should say, decide to turn tail, that could be something that would highly be worthwhile to know, because when the major indices start to roll over like that, well, then we could find a little bit of that corrective moment coming back in. As for what the catalyst could be, it could be with some of the earnings that are out there. It could be something geopolitical. We're going to have to watch and see what happens with that. I don't think that we've actually gotten non-farm payrolls or the unemployment rate yet. And as a matter of fact, now we're in November, so it could be that we're missing out on those as well. And as a matter of fact, those could be the things that snap it, that we could get those reports. Finally, the government gets back and going. And then BLS, the Bureau of Labor and Statistics. Let me actually bring that up here. All right, so take a look at this. Let me pop this up here for you. This is non-farm payrolls on Trading Economics, not BLS. But the reason I brought this up here is because we can plainly see August is the last data point that we have. And that means as of Friday this week that not only are we missing September's numbers, but we're missing October's numbers. So when the government shutdown ends and BLS gets back in session, are we going to get both of them? And if so, what are they going to look like? Because non-farm payrolls has been in a climb. We could see the downtrend happening. We had a negative print on them. Is that going to be super negative? What about unemployment rate? Is that going to be something that spikes on us? Is this all being held in the background and we're just not allowed to know on the consumer end until things get positioned for us? Because if they come out super sour, that we have very low non-farm payrolls, well below 7 million, consider that to be a bad thing. If we also get unemployment rate that happens to go quickly above, I think 4.4%, maybe the last one, if we quickly go to 4.6, especially in this last quarter as we get into September, October, November, December. So I know that's last third of the year. In any case, as we get into those months, if we start to get 4.6 and higher, that triggers the SOM rule again. I believe I'd have to go back and look and see, but I think 4.6 on average through September, October, November, December is enough to get us back into that, hey, we're in recession type territory. And so if there's any negative catalyst, that's exactly what I'm looking for, is those numbers. I think we really should do right to sweat them when they come out. So government shutdown ending, woohoo! Does it make the stock market spike? If it does, let's see what happens when they say for non-farm payrolls and unemployment rate, because if they go south quickly, then the market can also go south quickly. So we want to be watching. And I know it's funny for unemployment rate, because unemployment rate up actually is a very southward thing for us. It can be a very negative thing, and that can have a very big snapping effect on the market, especially from where it's at right now while it's being indecisive like it is. So that's the take that I have. And I was talking to a friend at work today, and I said, when you take a centered approach to things, it's really hard to get viewers. I know that I've watched people who do doom and gloom and very negative sentiment things, and they do that consistently over time to scare people. And so people come back and watch, and they have really high viewer counts, tens of thousands of viewers. I'm just not that guy. And so I guess I'm sorry to myself for not being that guy, or maybe I'm glad not to be that guy. And then there's also people that are very, very wildly bullish that want to lean everybody into buying everything all the time. And I'd rather try and take a look at what's going on in the markets themselves, and also take a look at what's going on more of a macro level to make the best decisions possible. And also to take a look at what could be coming our way that could be that snapping event, if there is going to be one, by the way. So right now, overall take, general direction is still up until we see technical signaling otherwise, or until we have some major catalyzing event that might move us back in the other direction. So you can go back and write that down. You can record it. You can quote me on it. I guess it's already recorded. You can see it on YouTube. Guys, otherwise, thank you very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. I will see you over in the Discord. Links in the description. Have a good one.